everyone. Thank you for joining our webinar. I'm Margot Kennedy, and this is my business partner, Christy Brock.
Hi.
And we are WeCre. We're really excited to share our newest acquisition with you. We are purchasing Jackson Storage in Jackson, Mississippi, and it's going to be Access Jackson.
Let's get started. Access Jackson.
So just to get started, a quick disclaimer. This is not an offering. This is just a general informational webinar. Feel free to pause the screen and read this carefully. In order to have a complete offering, you need to view our private placement memorandum, which is in our investor portal. We are going to talk a little bit today about who we are, about the deal, what's great about this deal, and how you can invest.
So I'll go first. I'm Christy Brock, and to see both of our full bios, please review the PPM. Our full bios are in there. But basically, I've been in real estate for a few decades now. I held a broker's license in California for about 20 years, and I've been a full-time real estate investor for about 7 years now. I've been GP on 3 projects. I currently own another self-storage asset in conjunction with Margot. And I love the real estate business. I love investing. I'm very happy to present this opportunity to you all.
And just like Christy, I've been in real estate for many, many years as well, doing a lot of different things. I've got some experience in commercial leasing before I even got involved in purchasing multifamily and self-storage. And I have partnership interests now in over 500 doors across primarily multifamily projects and 250 self-storage units, as Christy mentioned, that we did together. And I'm GP on 6 of these projects.
Access Jackson is going to be a wonderful, wonderful investment for all of us. We're buying it for $3.1 million, and our total all-in value is just under $3.8 million. On exit in about 3 years, we estimate the value to be almost $5.1 million. We will have Class A and B shares on this deal. Class A shares will earn a 10% pref, and Class B shares a 7% pref. The overall annualized return for both Class A and B is projected to be 23%. This is a wonderful facility. It's 489 units of non-climate control self-storage, and we plan to add climate control because there is a vacant retail space that's about 5,000 square feet. That addition we'll go into a little bit later, but it's going to give us a nice bump in our total income and to the overall value of the project.
Yes.
Why this deal? Margot, if you can give us a little bit more about this project.
Yep. So Christy told you a bit about it, but here on the screen, you can see an overhead view. On the right there is Jackson Self-Storage. As you can see, there's a number of buildings. And then this part on the left, the retail space, is part of this purchase, but it is currently a vacant building that we will convert to climate controlled storage. And it also has quite a bit of parking with it, which is a bonus. We can probably make some money on that as well.
And just
Here's some pictures. That's the retail space. We have a nice unit mix. And it's in a really great location. It's got very high visibility. It's right on Highway 80, very close to Highways 20 and 220, which you can see from the property. It's close to Jackson State University, and access to it is very easy in any direction you go. There's very low competition in the trade area, which is great. And one thing I should mention too is we had a feasibility study done by a third-party group, and we got a B+ in the visibility and access because we're so close to that road. So it's a really great location.
And we'll go into a little more detail on the feasibility study in a future slide. Jackson is a great city. I think a lot of people are sleeping on this MSA. It has over 230,000 people in the MSA. It's very centrally located. There's a wide, diverse employment base from local government because Jackson is the capital of Mississippi, but it also has a solid manufacturing and healthcare base. The metro has had an annualized estimated population growth between 2000 and 2004 of a little over 1%. So it does have a growing population. It is slow, but it is growing. And there is a lot of money being invested. The GDP growth rate between 2018 and 22 was 20.5%. And that's according to the Federal Reserve Bank of St. Louis. So things are happening. It's an interesting place. Here's a couple of projects that are going on in the Jackson area. And this is actually in Jackson, not just in the MSA. And once you receive a copy of this presentation, you can click on these links and get a little bit more detail. But as you see on the screen, it's a variety of retail, commercial, and educational type investments. Millions of dollars are going into Jackson to make improvements. The residents, when you talk to people there, they do believe that, hey, Jackson has a future and it's a great place.
Yeah.
And we saw that too when we were boots on the ground, right, Margot? We had a
absolutely, absolutely. There was a lot of improvement going on.
Yes.
So Jackson has does fit our buy box. This is exactly what we're looking for. First of all, it has a great story. The seller has owned this property for over 30 years and has no desire to continue operating this facility. They are selling off everything they have that isn't in Texas, and this happens to be one of the properties and a great opportunity. They're just ready to cash out in a capital gains friendly manner, which we are providing them. There's a great potential here for not only expanding and adding units, but also increasing prices. So as I said, it's been managed by the same person for over 25 years. And, you know, she's really not working too hard at it. There's no website. There is a website, but it's not a website that's geared towards the self-storage. It's actually geared towards the truck rentals. And so it's a very poor online presence, and customer service is limited to business hours, Monday through Saturday. And of course, lots of people are looking outside of those hours. The rents are up 20% below the comp set across the board. So this is really a case of low hanging fruit. We have a chance to increase occupancy up to over 85%, do remote management to reduce expenses. We're going to offer tenant protection to increase income and add these climate control units.
Again, our feasibility study that Margot mentioned earlier, we're very pleased with the results. If you get a feasibility study and the firm conducting it says don't move forward, you don't move forward. And the firm that did ours recommends not moving forward about 70% of the time. And they suggested that this is a good project, we should move forward. We have very high marks in our visibility, location, traffic count, and access. And what's really great is that the two areas where we had low marks are areas where we can very easily make improvements, and it's within our budget and our business plan to do so. We will make a very sizable CapEx investment to improve both the condition and the curb appeal, in addition to increasing income with the conversion and addition of the climate control units. Our business plan is to acquire, expand, manage, and sell. And this is WeCree's business plan for everything that we will do. We're going to buy it for an all-in of just under 3.8. We're going to expand with the conversion. We're going to hold this one for about 3 years, and we'll sell at just over $5 million.
Nice increase.
Yes. Margot, how are we going to succeed?
So we're going to bring on third-party management. We've engaged Copper Storage Management, who is an industry leader, and they specialize in remote management, which is what we are interested in doing. They have decades of experience. They have many, many completed deals. Their management style is very effective in what they do, and they have a proven track record of success. They also own some of their own properties, and they've had round trips on 26 asset portfolios an asset portfolio that returned 177% to investors during a 30-month hold. Huge, huge. They were going to do property improvements. We're going to repair the driveways, which need repair. The concrete and the asphalt are in poor condition. We're going to paint the facility, do repairs to some of the units and the outsides of the buildings, and replace all the signage and improve the curb appeal. We're also going to add the climate controlled storage, which we talked about, and that is going to be a significant bump to the value of the property.
You know, and we've been in this deal for several months now, and it just keeps getting better and better. When we initially underwrote it, we have always been very conservative. So for example, when we initially underwrote it, we estimated the driveways were going to cost about $200,000 because we thought, okay, the amount of concrete, the repairs to the asphalt, you know, it's better to go high than low when you're making your estimates. So now that we have our actual bids, we're very thrilled because the actual bids have come in at about half of what our estimates are, which allows us to begin immediate distributions. It improves our cash flow. We're raising less money than anticipated. We're able to structure in some other things that just make this deal much stronger. We've gone over these numbers before. Our purchase price, our all-in costs, and our exit. Our sources and uses. We, as Margot said earlier, are very lucky to get seller financing on this deal. 57% is financing, and we're raising about 1.6. Our loan is a 3-year loan, no prepayment penalty. It's at 5.25%, and 2 years
Awesome.
of that is interest only. You can't beat that these days. I mean, borrowing at 5.25 is fantastic. And again, tremendously helps us with our cash flow and our ability to begin immediate distributions to our investor partners. Our closing costs, CapEx, reserves, and acquisition fees are all here on the screen. But basically, what we do want to point out is a little bit of detail for our CapEx and our reserves. Our CapEx, again, we have our driveways and we have that bid. Painting, we have one bid, we're getting more bids so that we're sure on our numbers. There's a number of units that need to be cleaned out. And again, we're estimating very high on this number, but we're comfortable with it. We're replacing all our signage. Some units need repairs and our conversion for climate control. As for our reserves, we have reserves for 2 quarters of both expenses and loan payments. Even though we have seller financing, we're approaching this as if we don't, and what would a bank require? And so we're putting that aside, and we will return those funds and utilize those funds as needed, but that is just so that we, again, are on very solid ground with the way that we are underwriting and presenting this.
Right.
Our pro forma, this, you can look at a little bit more detail on this, but what I'd like to really point out is that for our rental income from acquisition until our target exit in year 3, we're nearly doubling our rental income and our expenses because we're going to bring on our third-party management, better control expenses. We don't have a fully remote model on this. We will retain 1 employee, but allowing, because we're retaining an employee, that allows us to also retain our U-Haul income. So that's a really nice bump. So our expenses will decrease because we're managing significantly better, and our income will nearly double. And that's what makes this, among the things that makes this a really great deal.
Yes.
Margot, this is the part that everyone wants to hear about.
Yeah, that's right. This is
Investor
the exciting part.
Right.
Yeah. So the returns on this deal are just phenomenal. We are anticipating a 10% cash on cash return. That is the pref for Class A members. Class A members, it's a minimum investment of $250,000, but on a per $100,000 basis, you can see what the returns are. Again, it's a 23% annualized return, and look at that IRR, over 20%, actually for both classes.
Well, here's Class
B. Yeah, Class B is a 7% pref. And again, 23% annualized return and over 20% IRR. Excellent returns.
And the important part here, how to
How
invest.
to invest. Yes. So this deal is for accredited investors only, which is why we can advertise and do a webinar like this. The minimum investment, as I said, for Class A members and the 10% pref is 250,000. The Class B pref, it's 50,000 with $5,000 increments in both classes. We're ready to take investments now, and it's a first come, first to fund basis. So with returns like this, I suggest getting in as quickly as you can. We expect to oversubscribe. And so the next thing you do is go onto our investor portal to register your commitment, and there's a lot of extra other information there.
Right. You can
It's at
see some
Invest
videos,
Next.
some additional pictures, and we look forward to working with each and every one of you. So please reach out to us, schedule a Zoom, schedule a call if you have questions while you're reviewing the information. The PPM and all investment docs are available on the investor portal. So reach out, review, talk with us, invest.
Yes.
Thank you.
Thank you so much for watching.